Okay. Hi, everyone. Good afternoon. Thanks for joining us. So I felt that it's been a while since we'd had a webinar, and there's been enough significant changes that it was worth putting on another one and updating people on what's changed. So effectively, throughout this webinar, if you haven't been on one before, we're going to be talking through what the latest updates are. I have got a bit of an assumption that you already understand sort of previous changes that have happened in terms of some of the support mechanisms if they've already happened in the past. If you need to go through it in detail though, please do either ask a question here, and if I think it's going to take too long, we can also take it offline and have a conversation offline as well. That's absolutely fine. So today what we're going to cover is we're going to go through the furlough changes. So what's happening with that? The job retention bonus, and just a kind of a recap of, because that's starting soon, around different types of employment support for traineeships, apprenticeships, and a recap over those, and this new Kickstart scheme, which I think will be quite useful for a lot of people. We're going to run through some of the extensions on VAT and self-assessment, and then into some of the changes that were announced last Thursday around the job support scheme and the loans, and how the government are trying to support people with that. Can everyone just, there's a chat facility on here as well. If you can just message that and say that's okay, if everyone can hear me fine. Fantastic, thank you, Nikki. Excellent, okay. So first thing to note is we obviously discussed the fact that the furlough scheme or job retention scheme was changing every single month. And it's now come to the point where we're approaching the final month of this. So this is going to be coming to an end. Obviously that means for a lot of employers, that's a significant effect on potential cash flow or how they manage their staff, but it is important that is changing. We are going to be talking about a new scheme that's coming in, but it may not be the same for everyone. Not everyone's going to be able to take advantage of this scheme, depending on how you've got things set up with your current employees. And just a reminder that for those that have been using the job retention scheme so far and have furloughed employees already, if you bring them back to work and they earn at least £520 a month in November, December and January, and it must be a continuous piece of employment, you can't just stop and start them, then you'll be entitled to £1,000 in Feb per employee. You can claim for that money once the RTA is submitted. Now, I said more info was published, actually. I haven't updated this slide. So basically, it has been published now, and that is going to happen, but they haven't given us the full details of how that claim back will work, through what process, etc. at the moment. So we'll keep you updated on that when they do release it. Is that a useful reminder for people there? Excellent, thank you. So what we'll do is we'll look at some of the other things that are worth reminding people about as well. So the government announced around some training placements, and those have now started. You can have people going through traineeships or training placements with you as of the 1st of September. And that will go through till the 31st of July 2020. So this is very different to the Kickstart scheme. I need to really make that stress that it's not the Kickstart scheme, it's very different. This is a training placement. So the employee is not getting paid, or the individual is not getting paid, they are training. It's for those people who don't have the skill set currently to go on an apprenticeship or any other form of work. And it's you as an employer offering a chance for them to learn and develop their skill sets. So it's got to be at least 70 hours, a minimum of 70 hours, and that can be across multiple work placements, but they have to employ that young person, has to do at least 70 hours, and no more than 240 hours. And the idea is that as an employer, you would effectively give them the experience of what employment looks like, some on-the-job training, and then an interview at the end of that process. And there's no cost to you as an employer, but you do get £1,000 per trainee for that. Useful for those businesses to have a little bit of capacity and want to support the development of a young person, basically. Next thing to remind you about, again, different, is the apprenticeship changes that came in. So that's £2,000 for each new apprentice that is under 25, and £1,500 for over 25s. That was opened in August. So this is, if those who are looking to take on apprentices, you can gain a little bit extra just to help with supporting that, and you're taking the jump into employing apprentices. National minimum wage still applies. and it has to be at least 30 hours per week. And this is additional to the current £1,000 for 16 to 18-year-olds. So if you are taking people on that are sort of still part-time in education and they're doing that 30 hours, you can technically get up to £3,000 per apprentice. Any questions on those two, either the training placement or the apprenticeships scheme? If you have no questions, that's fine, just put no Qs. Excellent, okay. So the next one is probably what most people are looking at the moment. It's been on the news quite a bit, which is the Kickstart scheme. And this is for taking on those that are 16 to 24 to do a work placement with you. They'll work with you for 25 hours per week, and the government will pay their wages, pensions, and employers' NI. Now, what's really important here is this: you can't actually apply for this directly as a single employer unless you're taking on at least 30 people through this. But what they've done is that through the Department for Work and Pensions, they've allowed people to apply, mainly training providers, to sort of be an intermediary or they're called gateway providers. So what you can do is you can apply via these gateways to say, actually, I would like to take on an employee through this. All the wages are dealt with and all that side of things by that training provider. And depending on the provider you get, they may also support the young person with things like employability skills and other job support things as well. So this placement is really important. It must be a new job. So the idea is with everything that's happening with coronavirus, the government have been really concerned that those 16 to 24-year-olds are not, with those without job experience, because the market's going to be getting a lot more competitive, aren't going to be able to get find new jobs and get experience. So this is to encourage that process. So it can't be about replacing existing jobs. It can't reduce the amount of time that a contractor or an apprentice or an employee does currently. It has to be a new role. Effectively what you do is you'll have to record all the details about that employee, things like what training are you providing to them, how does that support their ongoing development, and those sorts of things. The gateway or the intermediary, that person that sits in between you and the support, will take a certain amount of fee, and then it says everywhere that the employer will get £1,500 for setup and training. However, what we're seeing is those intermediaries, those gateway providers, are actually working things out with the employer where they are taking so much of that, and then they're making sure that they do all that employability support. So as an employer, all you have to do is make sure that person basically is at work and deals with whatever tasks you're setting them. If they suddenly don't turn up to work, it would be the gateway provider that would deal with that, the HR issues behind that, etc. And obviously their pay, their wages, and all that kind of stuff. But I think this is really quite good for a lot of employers. It's going to give them the opportunity not to worry about the PAYE side of things and add that extra complexity to the process of employing somebody, but gives these young people a great opportunity to get extra experience. Any questions relating to that Kickstart scheme? Okay, what I'm going to do is I do have a link, which I'm going to just drop in the chat now. If anyone wants to have a look, and for any local providers in their area, this is how you can find out who those providers would be, those gateway providers. Sometimes they call them gateway providers, sometimes they call them intermediaries. Basically, it's just a person in the middle. Excellent. If that's all good, just drop in the chat and say all good. Excellent. Thanks, guys. Appreciate the interaction. It saves me just talking to myself here. Now, I've been banging on about, particularly in the last couple of months, around my concern with cash flow issues for a lot of businesses, particularly those that have delayed their VAT payments. They're going to have to stop paying back CBILS and the bank's back loan. But the government have introduced some what I think are really, really good measures for this to support businesses further. So the first one is for VAT periods that happened sort of March to July this year, you could delay your VAT payment until the 31st of March 2021. which was good in itself, just to give people a bit of leeway. The problem is that that takes good planning and preparation. Obviously, for a lot of businesses, the economy hasn't built back up. So what you've got is the government have now introduced the ability to spread those payments. Instead of paying it one time in March, you can spread it over 11 equal payments. Now, you do need to opt into this. You do need to discuss that with the HMRC. You can't just start paying it less, because that will incur fines, the normal sort of fines and things. So you do need to arrange it. They haven't said how you'll do that yet, although we assume that will be through your online government gateway. That's our assumption at the moment. Now, obviously, you can still pay this early. You know, and I do encourage people to do that. If you can pay it. That's fine. But look at your cash flow over the next sort of 6 to 12 months. And if March, April time is going to be a bit of a tough point, it's a very useful tool to be able to spread that out if you need to. And that you might not have to do it over those exact payments. If you do have any specific needs, you can call HMRC and have a discussion around that. What do you guys think? Do you think that's quite useful? I thought that was, very useful. On the VAT side of things as well, just a quick note that at the moment, those VAT registered businesses can apply for a temporary rate of 5% for certain hospitality, hotel and holiday accommodation, which is making things cheaper for us as consumers as well. It did start on the 15th of July, but that's now been extended all the way through to the 31st of March 2021. So it should mean that going out for food and those sorts of things will still be should be slightly cheaper. Now, for those who are self-employed, there are 2 new measures that have come in. So the first is those who had to pay a payment on account. So normally when you do your self-assessment, you have to submit and pay payments by the 31st of January. However, if you earn over 1,000 or have to pay over £1,000 in tax, you have to make an extra payment early in July. That's called a payment on account. For those who deferred their payment on accounts from July, which was one of the measures the government brought in, that's still technically due by the 31st of January, but you now, similar to the VAT, you can now set up what's called a time to pay plan of up to 12 months. And you can do that online through your government gateway. That is, unless your debts are over £30,000, i.e. your tax is due is over £30,000, in which case you have to give them a call and have a discussion over the phone, but you still are eligible for that. They just want to work things out, and their plan is to basically work things out on an individual basis with those. So again, really useful for those who perhaps are struggling to budget or are self-employed, and they need to spread. It's important to reinvest back into growing the business and make sure those payments are spread to help cash flow. Now, the second part for the self-employed is there's been an extension to the self-employed income support scheme grant. You must have already had this grant before. So if you've already applied for the SEISS grant, then you're eligible for this, and you have to continue to be actively trading, but basically just have a reduced demand in what you do. So your turnover is going to have to be lower. Now, this is a six-month period, and they're going to break it into 2 3-month blocks. So November, December, January, and March, April, May. In the first grant, November, December, January, they're going to do a grant for 20% of the average monthly trading profits, up to a maximum of £1,875. So this runs the same as the previous self-employed income support grants in terms of how it's calculated, but now it's 20% of the average monthly trading profits. And the idea here is to try and encourage, basically give a little bit of extra support to those that are self-employed and have slightly lower. So I've got a question here. Is this just for if you're registered as self-employed, not for those that own a limited company? Yeah, that's a really important distinction. So one of the common misconceptions is that if you're a director of a limited company, that you're self-employed. The irony is you may employ yourself, but in terms of the government's definition of self-employed, that's basically effectively a sole trader. Okay, so it's important that that is a distinction, yeah. And they're going to have a second grant, which will be, they basically haven't given the information out for now. They're going to review it similar to what they did last time. Are there any other questions around the self-employed side of things? If you're all happy, just go all good. Fantastic, thanks guys. So now we move on to the job support scheme. So the job support scheme is effectively kind of a replacement for the job retention scheme, the furlough process, but it's an evolution, I would say, of that. It's going to be slightly different in how it's managed. So you don't have to have already done the furlough scheme. So unlike the self-employed grant, with this one, you don't have to have already been eligible for anything in the past, and employees don't have to have gone through the furlough process in the past either. This is completely new, kind of restarting again. It starts on the 1st of November and lasts for 6 months, and effectively you will continue to pay staff for the hours worked. That staff member must work at least 33% of their normal working hours. And what they're going to do is they're going to use a similar calculation method than they did with the furlough scheme. What would happen is for the hours that the employee does not work, the employer will pay a third, the government will pay a third, and effectively 1/3 will be reduced. Effectively, the employee will lose that other third, but only of that amount of time that is not worked. But you have to have submitted an RTI by the 23rd of September. So basically, they have to be already on your payroll. Another question, does this include contractors? Unfortunately not, it is just for employees. And can you top up like you could on the furlough scheme? That's a really good point, Chris. The answer is I don't know. However, I very much doubt so. So there's a wording, there's one line, and it's down the bottom here, that is in one of the documents, which is that the government said, or they've said, the expectation is that employers can't top this up. So I think what their kind of method behind the madness, as it were, is that if your employees are working less, it's because you can't afford to give them those extra hours. If you can't afford to give them those extra hours, you can't afford to give them the additional top up. I think that's the method or the kind of thought process behind that. There's nothing formally written that says that in legislation, but that is a comment that they've made. So I believe it probably won't be able to be topped up, but we're waiting for more information on that. So here's an example of how it would work. So let's say an employee earns £1,000 in their wages. They only work for about 40% of that month. So about 60% they're not working. So the employer would pay for the 40% that the employee has worked as normal. They would then pay 1/3 of the unworked time. So if there's 60% of their time is where they're not working at all, I use these figures so it's easy numbers, split that into 3, so 1/3 of that is just 20%. So the employer would effectively pay the 40% and the 20%, okay, of it, so 1/3 of the unworked time. The government would pay 1/3 of that unworked time, and the employee would effectively be paid, in this instance, around 80%. So the minimum employee is going to be paid on this scheme is 77% when you work out the maths of the employer starting with 33%. So the idea basically is to keep employees in employment where possible and at a wage level that they can still continue to survive. The employer will also have to pay all the automatic enrolment pensions and also the national insurance. So this is open to all employers, as I've said, even if you've not used a furlough scheme. They may increase this after 3 months. They're going to review after 3 months and may increase what those minimum thresholds are, etc. And you can be claiming through the job retention bonus and the job support scheme. So if that employee is earning over that $520 per month, they can still be claiming through both of these schemes. I think that's quite an important point as well. So what I see with this scheme here is this is not going to, where the furlough scheme, the job retention scheme, was really for kind of a blanket hit all employers type approach. This is really now sort of honed in on those employers that are still potentially struggling with cash flow issues, don't perhaps have the quantity of work that they had before, and therefore they would probably be making employees redundant or reducing their hours to because of the amount of work. They don't have basically as much work available. So this is to keep those employees in employment and working to a reasonable level in terms of hours. Now, employees can go in and out of this scheme. So it doesn't have to be they don't have to be in the scheme the whole time. But basically, what the terminology the government have used is that each short-term work arrangement must be at least 7 days. Now, the interpretation we've got at the moment of that is that effectively, when you're doing those calculations, there must be at least a minimum of 7-day period you're looking at for those that are both working and having a period of not working. Similar to the furlough scheme, grants are paid in arrears. Now, it is important that, particularly for those who have sort of minimum contracted hours or salaried staff, you do still consult with HR to make sure that if you are, particularly if you're going below contracted hours, you've had a discussion with them to see if that's acceptable and allowed based on your contracts and everything that goes on with that. Now, with the furlough scheme, it was allowed in certain circumstances, so I would expect it is, but definitely important to speak to a HR representative to make sure that you've got the go-ahead on your particular employment contracts. Are there any further questions, or if not, if you can just say all good. Excellent, thanks guys. So hopefully this is quite new information to you. It's not just regurgitating what's on the news. I have delved into lots of information to try and get this for you. Got one final slide to go through, which I think is again another useful tool, or a tool in the toolkit, as it were, for businesses. But I do have some concerns over the way it's being explained, and that's the loans. So they've adjusted the bounce back loan, the CBILS loan, the future fund, and I forget its name, but the loan for larger businesses, not relevant for anyone on this chat at the moment. So in the bounce back loan, it used to be up to 6 years, and you now have the option that you can extend your payment terms from 6 years up to 10 years. Now that's fantastic in respect to reducing your monthly amounts. So when that does, if those payments do kick in after the end of the 12 months interest free, it does mean that you have a bit more leeway. So it does sort of roughly nearly half those payments. My concern is that still means for those businesses that you end up paying more interest over that length of time. So it is going to be important for people to do those calculations and work out whether it's still worth it to pay the additional interest. And that's the same for these other measures that comes into that. So with on the bounce back, you can move to interest-only payments for up to 6 months. So for 6 months, you can just pay the capital on the loan, so the main bulk of the loan, and not the interest. The interest part and not the capital part of the loan. And you can use that up to 3 times within that 10-year period. What you can also do as an alternative, what you can do is you can pause payments for 6 months. So what that would effectively mean is you just basically pay nothing for 6 months, but you must have at least paid 6 payments on your loan to get to that point. Now, those second and third bullet points are specifically on that bounce back loan. That hasn't been mentioned on any other source at the moment. And then on the CBILS, there's an option to pay over 10 years as well. And question coming in, do you have to apply for the extension? Yes, you do. So you would need to discuss it with your lender and explain that you would like to do this. Now, what I would say is, because this has just come in, I would expect, similar to like the early days of getting these loans, I expect a lot of people to be going to their providers and saying, can I extend this? Which means their phone lines will be busy all over again. It'll be difficult to get in touch all over again. So hopefully lenders will have a good online process for this, but I don't think they all will. So just be prepared. You may have to wait a long time on the phones. Just my personal thoughts on what I think might happen. So that's kind of most of the support measures that have come in. There's one other thing which came in my emails today, which I thought might be useful for some people, or at least if it's not you, it may be somebody that you know, is there's now, because it's now as of today, it's a legal duty to self-isolate. Okay, so if you have COVID symptoms, it is the law. You must isolate for, depending on whether it's you or your person in the family, for specific periods of time. For those who are on lower income, particularly those that sort of claim for employment benefits and things like that, or any sort of form of benefit, to be fair, those on low incomes who are unable to work while they're self-isolating, there's up to £500 from a test and trace support payment. which could be useful for some people. That is basically going to come into effect by around the 12th of October, I think. But that's effectively because some people, they believe you're going to have to people are going to have to self-isolate, but actually not have any money, and they need to earn money. So it's to try and help within that, to give them that sort of that one-off payment to tide them over, as it were, which I thought was, it's a really nice measure. So I've been quite impressed actually this time round with the government's support and what they've brought in. They've really thought about how it's going to affect the economy and affect businesses. Whatever you think about the government, I do think the support measures are really going to support a lot of businesses, particularly what we're seeing in cash flow forecasts. It's probably saved a couple of businesses from difficulties. So another question, will there be any leeway with tax payments January 2021? Are you referring to self-assessments, Nikki? As obviously what we're seeing at the moment is we are seeing people call HMRC and have those discussions. Now, if you remember, the government back in July time introduced PAYE time to pay arrangements. What that effectively means, and that's been around, by the way, even pre-COVID, that was already there, something called time to pay. And it's basically HMRC's way of making sure that if somebody is having trouble, if you just wait and then you can't pay it, and you say afterwards, they're still going to fine you. But if you call them beforehand, you have to make that payment, and have a discussion and say, look, I can see this coming up, I'm going to be struggling to make that payment. Can we arrange payment terms? In general, HMRC are pretty good. And at the moment, what we have seen is they've been particularly helpful with businesses that have said that. So my suggestion is, if anybody is really struggling, to call HMRC, have a conversation, and just say, look, but have in your head already what you think is a realistic timescale to pay, because they will ask you that. They'll say, how long do you need to pay? What does it need to look like? Now, obviously, their aim is to make that as short a period as possible. But at the end of the day, they still need to make sure that you're surviving. So there's a balancing act here. So yeah, absolutely, Nikki. There's room, but you do need to call HMRC about it. And I would say that they're going to look at your situation, and also you can probably only do it once normally it's once in a business's life cycle, actually. Things like VAT and time to pay. So it's basically important if you're going to do it, it's because you really do need it. Your cash flow is going to struggle, not just because you think you fancy just spreading it out to make things a bit easier. Cool. Okay, are there any other questions on any of the items that I've gone through today? That brings us to the end, by the way, of the webinar. So hopefully short and sweet, but giving you all the information you need in respect to that. What I'll do is I'll hang around for a little bit in case anybody has any questions. But if that's all been good, then please just let me know in the chat if that was useful. Excellent, guys. Glad it was.